Hi, welcome to this week's market analysis, and we are looking at the US market. This is S&P 500 ETF, which is SPY, it's a symbol, and we are now looking at this week's bar. This is a rather narrow spread bar, and we are closing in the middle with increase in volume. So just notice that this bar we have dipped down into this range of 131 to 134 level, and then we have a bounce back up to close in the middle of the range. However, we are also closing below the trading zone here, this trading range here, and we're closing below the bottom of this trading zone. So there is suggestion that there might be further downside to come for this SPY or US market or S&P 500, and I am looking towards this 128 to 130 level for support, which this level is the halfway of this up move here, this entire up move, and also a confluence to this resistance now becomes support, might potentially become support at this level here. So we will want to watch price, how price is going to come back into this level here, and if it breaks this level with force, it means that we have a widespread down bar with high volume, then we are likely to see this range play out. However, I would think that there might be a rebound from there to come back into the 131, 134 level, which is ICE level, to test and see whether we have any conviction to the downside, or is it a conviction of a end of this down move and proceed to the upside. So we will have to wait to see that to how that is happening. So let's look at the daily chart now, and on the daily chart what we are seeing here is that on the background we have this up move, then we are shortening up the thrust. We have this big down move here with increase in volume on the downside. However, on the rest of the other rallies, it's more lackluster, except for this rally we have a slightly bigger rally here, and volume is a little bit higher, but as compared to the down wave, it's still not as high as the selling volume on this down wave here. So it looks weak at this level here. It tries to break through this very small little supply zone. However, it can't do it, and then we see supply coming in and close the bar in the middle. Then we have a follow through to the downside. We have also seen that now supply is increasing on the down wave, except until the Tuesday and Wednesday bar. These two bars we have a pretty high selling volume on these two bars here, but we are not seeing any net progress to the downside. So that suggests that there's some buying going on at this level here. But I am not thinking that it's going to turn around, because this up move here has already been negated by this down move, and we are seeing increase in selling volume. However, buying volume isn't sustaining itself. So there might be a relief rally. If the relief rally would come, I would expect resistance to be at about 139 at this level here, or this is the halfway zone at 138. If it fails to this level, if it fails to reach this level and turns down, then I would think that the chances of SPY visiting the low of 128 to 130 level is very high. So we will have to watch that how it unfolds. But if it's able to reach the halfway and then all the way through to the 139 level and met resistance here, then I would think a sideways movement is more likely to happen for next week. So that is my take for S&P 500 this week, and we will go to the Jakarta Composite Index next. Hi, this is Jakarta Composite Index, and this is the Indonesian market. And what we are seeing this week is that this big down bar here has took out the ranges of past 5 bars, 1, 2, 3, 4, 5. This 5 bars was taken out by this big down bar here in 1 week, and we are closing on the low. One thing to note is that this uptrend line, we have also broken it, and we are closing below it. On this whole look is that there is some weakness that's coming into the market at this moment for Jakarta Composite Index. The low volume here explains that it is probably due to no demand rather than it is a lack of supply, because of the spread that is being too wide for a low volume. That just explains that at every single price level, the number of buyers are quite limited. So sellers are able to move price swiftly down all the way to the close to the low with just a little bit of volume. So there's some ease of movement on the downside this week. And looking at the background of Jakarta Composite Index on the weekly chart, we can notice that there's these two big up waves here with considerable high volume. And we probably want to check it out on the spreads and how it moves up. We are not seeing any much ease of movement except for this one here, but the rest of the other weekly bars are not showing ease of movement to the upside, as also for this one. But we are also coming with high volume. So that suggests that there's some effort in going up, but it wasn't rewarded with much ease of movement to go up, which also suggests the other side of the scale will be the supply that is probably quite heavy on this up move here. And then now we are seeing some increase in volume, and on the last few weeks trying to hold the price at this high all-time high level, but it wasn't able to do so, and then now demand just tired out and price just fall into much easier to move down. So on the weekly chart, there is some weakness that's coming into the market on the Jakarta Composite Index. So let's look at the daily chart. And on the daily chart, what we are seeing here is that on the background, in the background, we have this trading range. We break out, test, and then we move up swiftly all the way up to the high of 4232. And on this move, we are seeing an increase, a very high increase in volume on this up move here. It looks like a a buying climax here, and then we see automatic reaction with a low volume selling. But however, on the way up to the all-time high here, we are not seeing any ease of movement like this. So the movement here is very difficult, showing us that it's very difficult to move the market up, not like this way of moving up here. And the volume, notice of the volume here, 1 2 3 corresponds to these three waves, 1 2 3. They are relatively consistent and relatively high as compared to the background, and we are not seeing much progress to the upside. So this is showing of effort versus result on the move up here after this buying climax. So, and we are also coming with a upthrust last week, and this upthrust has produced some selling pressure in the market. And we are also seeing some increase in the slight increase in the volume on this downside. However, the downside volume is still not as high as the demand volume here. But however, on the scale of demand and supply, which we see difficulty in moving up, that suggests that there might be some superior force that is acting upon the market, and this superior force will be the supply. And on this three volume here, on this up move here, there might be some selling going into the strength of the market, and we are seeing no net progress to the upside. And then we have a upthrust, and we are now seeing market is bringing down with just less volume to bring down the market down. So that means that in this level here, the demand who has already trying to buy the market up has already been tired out. And we are seeing the evidence of demand tiring out on this down move here on this week. So we have to be careful. That is a weakness that's really come into the market in this strong up move market. This is a weakness, but however, this weakness is not so significant in order to bring this turning point down all the way to turn this bullish market into a very bearish market. So I think this is still a very early sign of weakness, and it's still not as significant as it should be, unless we see selling volume building on the downside and seeing JCI taking out the support level, which is at 40.38 to 40.65. If you take out this level and bring JCI down with increase in volume on the downside, then I think we might be seeing a turning of the market to a more bearish mode. But I would expect next week that demand will probably come in at the 40.38 to 40.65 level, which we have a slight confluence here. Basically, I have drawn this reverse use of trend line and the channel and created a channel here, and this demand line of that reverse use of trend line channel is confluence with this level of 4038 and 4065 level. So I would expect some support to come in at this level here to probably bring JCI back up. And if it's going to go up, I would like to see it go above 4109 and going back into this trading range again. That would tell us that it has still this market still has strength to prepare itself for an continuous up move. However, if we do not see that, and we see a failure at the 4109 level, which will become a test of the break of this ice, then I think further downside for JCI is probably in store for the near future. And probably the likely levels that we want to see will be after breaking this level. It will be the 38,696 level, which is at this level here. Then this will be a more critical one, which is a axis line at 3850 level. Will have to provide some support for price. But that will probably happen over probably a couple of weeks in the future if the weakness going to persist. So this is my take for the Indonesian market, and next we are going to Hong Kong market. Hi, this is the Hong Kong market, and we are now looking at the Hang Seng Index on the weekly chart. Basically, this week it's a weakness, and this is a persistent weakness on this market, and we are now seeing this bar closing all below the supports. First thing, you will notice that this is the demand line, and this is the first weekly bar that is closing, full bar closing below the demand line. We are also closing below the low of this weekly bar, which is the 20,035 level. And we are also closing below this mini downtrend channel, and closing on the low. So everything on the price action front just suggests that there will be further downside for Hang Seng to come, and the possible support level will probably be the 19,242 level, which is at this level here. And if it's broken down, the next likely support that will come in is probably 17,613. And I have put in the reverse use of trend channel, and hopefully that this confluence between this demand line and the midpoint here, this is a midpoint of this up move, the confluence here will probably provide some support for Hang Seng to bounce back up, probably coming back to the 2272 level, and hopefully to see it come back up. But I would assume that there might be a lot of selling going on at this level here between the 2270 to 2500 level. So there will probably be selling pressure at this level here, unless Hang Seng did a run through and break out straight up all the way to close above this high of this bar here. So if that happens, then we're probably likely to see Hang Seng going to range within this very big trading range here. But however, this week's bar suggests more downside, and the downside is more likely to be coming into this level here on the weekly chart. So let's look at the daily chart. Basically on the daily chart, I have also put in the reverse use of trend line using this point to this point, and we can see that its price is behaving well within this trend channel. So this reverse use of trend line might be in play. We will have to see how price comes back down to test this demand line here. And on the bigger demand line, we have seen this week we have really convincingly broken down this demand line. So any rally back up, you will probably find resistance at 2500 level, or even the demand line itself. And we have also have this minor uptrend channel. It is also broken with a gap down, and it has never looked back to cover the gap, and the price just continue falling down. However, in this condition, we might be easily going into a oversold position, which on the weekly chart we saw the minor downtrend channel, and we had a oversold position in that weekly chart. So in the early next week, I would be thinking that Hang Seng might find some support at this level here, or probably near to this demand line. and then we probably will see a rebounds back. But the resistance level, I would think, will still be the 2500 level, which probably could provide a very strong resistance level to the Hang Seng for moving through up there. And the continuation of the moving down will probably be coming back into this 19242 area, which probably might provide some first level support at this level here. But overall, on the overall picture, Hang Seng is now making lower lows and lower highs, and it is now in a downtrend. But however, if we look at the entire up move on this up move here, this downtrend is not as easy as it seems as we compare to this up move here. So there is still some resistance to the downside, and probably there is demand happening around this area here. So we will want to wait for the price to react at the low and to see how the reaction comes. One thing to note is that at this down move, this current down move here for the past 2 weeks, we have also choked up much supply volume coming into the market. And if you have compared all this volume in the background, we are seeing some supply increasing in the background. However, demand is not increasing as much, but instead of moving up easy, we are also seeing some effort versus result on these two big up moves here, 1 and 2. We are seeing some effort versus result there, and then this is a confirmation of that effort versus result, which had some hidden selling going into the strength of this up rally here. And then now we are seeing weakness coming into the market, and this is the largest down wave in all this up move and the side wave movement here. This is the largest down wave, and with increase in volume. So weakness is definitely coming into the Hong Kong market, and we will probably likely to see further downside for next week. So that is my take for Hang Seng, and let's go to the Singapore market now. Hi, this is Singapore market, and we are now looking at the STI weekly chart. This week we have a big down bar which closed on the low, breaking out of breaking down of this trading range, and we have an increase in volume which looks very negative, and you will probably be in all traders' mind to think that STI might be turning bearish to break all the other supports on the low. However, let's step back to take a look at the whole structure in the overall view, and the weekly chart will provide a better view of that, because we do not want to see one bar to determine that all those effort that's already been put in to build probably a bullish case just washed away by just one bar. So let's look at the structure now. We can see STI have a range up here, and then we start to build another mini range here, and we break down of that mini range, and with a very swift and very fast kind of downward movement, and probably created a selling climax at this level here. And then we see some slight follow through, but the wave has shortened as compared to this down move here, and then the time taken for the down wave to happen is longer than this down wave here. So we know that the selling is meeting some resistance from the buyers, and we are also seeing an increase in volume, but we do not see any significant progress to the downside as compared to this kind of move here. So there is some effort versus result on the seller side and this end here. And what we did see is that there's an immediate response to the upside, and we come back into this high, but we fail. It comes back down to test, because on this rally we do not really see much volume on this rally here. It's probably some short covering of this shorting here, and then we see sellers step back into the market again, but this time the volume is slightly lower, and then we see volume but we do not see any follow through to the downside again. And then we see market moves up with a very low volume, but now the third time when it comes back into the same level here, we have a very low volume down wave here. So this is a secondary test of this selling climax, and this secondary test is a low volume secondary test, suggesting that supply has already been exhausted at this level here. So that's why it enables the market to rally all the way through to take out the highs of these two highs here, and then we maintain at this level, and on this up move we see the greatest volume on the chart since this trading range started from here. starting from here. So this is the largest up move and the largest volume that's coming into the market, which is a very strong show of bullishness in the STI. And then we see market go sideways for 2.5 months to 3 months, which probably has been tiring out a lot of traders who has been going long on this up move here. And then we see, but we do not see selling, very heavy selling coming into the market, as you see that volume starts to decrease on this up move here, and price are not dropping down. So to me, it is something like a exhaustion, which really has a characteristic of exhaustion, that volume decreases, but price is continuing to press on the resistance. We do not have a very obvious lifting of lows, but if we compare this low to this low to this low, we are actually seeing some lifting of lows of this week, and then we are also seeing this lifting of lows on the last week. So there is a evidence of absorption here. But however, this week we have a very sharp down move and breaking down the low of this range here. So this might be probably a start of a weakness on this market to bring STI down further to test the mid-range, or even to test this range here of the 2793. This is the mid-range of this up move here. So it's probably likely to come back to test this level, and then I would think that it will just bounce back, because from the analysis from all this point all the way down to here, we have selling climax, we have effort versus result on the sellers, which is positive. We have some lower decreasing volume on selling. We have a test of the selling climax and the effort versus result here, which is also positive. And then we have a big rally, and this is the largest up move in the this range here. This is the biggest and the largest up move with the highest volume. So this is also positive, a sign of strength. And we are holding gains on this move here. So all these background positive points has added up to be mounted to be a bullish market story for the STI. However, on this one bar, it has to take more than this one bar to negate this whole bullish story in the background. So my take is that for STI, it's probably be a temporary weakness that's coming to the market, or it's probably a likely shakeout of any weak holders that is participating in this up move here, because most of the weak holders may have already been tired out from this 2.5 month to 3 months sideways movement, and they've probably been selling and selling and selling, or buying and selling, buying and selling, and taking some minor losses in this area here. So once this big down move comes like this with such an increase in volume, sudden increase in volume, it is more likely to be a shakeout, and it is shaking out all the weak holders that has been trying to hold here for the hope of a rally, and they are just dumping all their stocks into this bar here. So I'm thinking to myself is that this is probably a start of a shakeout, and this shakeout may have a process, probably take another 1 or 2 weeks to let STI coming back into this trading range again. So next week we probably likely to have some slight weakness, but I would think that coming back into this level, which is 2793, or even the midpoint, is probably a little bit difficult. If it does come in here, demand will probably be coming in at this level to push STI back up, hopefully to come back above the 2906 level and go into this trading range again. And basically from the whole up move here, if even it comes down to here, this is just a normal reaction, and we are not seeing a very significant weakness that's coming to the market to the so-called to negate whatever bullish story that has already been built at this level here. So that is on the weekly chart. Let's go to the daily chart. And on this daily chart, what we are seeing here is that, and the evidence on the daily chart, we're also seeing the lifting lows and the holding of gains after this big up move here. And in the wave volume, we are not seeing a very much increase in the selling volume here. Although we do see a effort versus result on these two recent up waves here, this 1 and 2, with a high increase in volume, accumulative volume on this up wave here. Although there is some effort versus result on this two up wave, and we have a up thrust, and now we are seeing an increase in selling volume coming into the market on this down move here. So on the daily chart, it looks bearish in that sense, and it is probably going to suggest that STI is going to visit the low. So I am expecting STI probably going to come down to the 2804 level, but on the weekly chart we still have the bullish story supporting the market. So whatever weakness that's already coming into the market at this moment here may be temporary, and we just have to watch the most critical levels, and I would expect some point to come into the 2824 level, or even if it break this level, we probably be coming back into this zone of 2779 to 2793 zone here to find support. And I would believe that the market will be holding here, and support will come in at this level to probably push STI back up. And we will just have to see how it approach these levels, all these two levels, and also how it deals with it. If there's a rebound, we also must see what kind of rebound is it. And because since we now have a increase in selling in the down wave, we are now wanting to see the next up wave. It will tell us whether this market is going to be a weak market that will probably go down even further, or is going to reverse this market up and back into the trading range or not. So the next up wave is going to be a critical one, and we will want to pay attention on it. So that is my take for STI this week and all the market analysis this week, and I hope you trade well and be careful out there. Thanks.